for people who do need estate tax charitable deductions, there are 3 pretty simple rules about whether you qualify to take the deduction or not. So whatever is going to pass to the charity, again, for at the death of the original client or donor, or at the death of individuals that they're naming to benefit, the rules are, in order to claim the deduction, the gift has to go to a 501c3 entity, okay? And that could be a private charity, a private foundation, or a public charity, which is what most of us are. And whatever goes to charity must go at the direction of the decedent. So it can't be something like, you know, at my death, I leave $1 million if my children want to make that gift to charity. It can't be permissive, it's got to be at the direction. Now that includes things like disclaimers. So if I were to say in my plan that I'm leaving this asset to my spouse, but any amount my spouse disclaims, decides they don't want for some reason, goes to the following named charities. That qualifies. Also contingent provisions, where I say, at my death, I want this distribution, but if all of my children don't survive me, we die in a common accident, something like that, then it goes to charity. That still qualifies as at the direction of the decedent. And finally, in order to take the deduction, the value of whatever passed to charity has to be part of the calculation to determine estate tax. It has to be part of gross estate. Pretty simple rules, right, about whether you qualify for the estate tax charitable deduction. But then up pops the partial interest rule. Okay, remember, the Internal Revenue Code basically says that in order to get tax benefit from charitable giving, where you're keeping something for yourself or for others, or you're doing partial interest giving or split interest giving, in order to get tax deduction, you can only make those gifts in certain forms, right? And there's all those exceptions to the partial interest rule. And those are the things we know about gift annuities or remainder trusts and pooled income funds, gifts of remainder interest in homes and farms, undivided interests in something. So lots of, again, if you're only going to give part of what you own to charity and you want tax deductions, you got to do it the way the code says to do it, or guess what? You don't qualify for the tax deduction. And because we've come from an era, remember, I mean, some of you